So hopefully that makes sense, where you kind of see the distinction between where errors and omissions or professional liability comes in and where general liability is. So make sure that you understand, like, what is it that I'm doing? Do I want coverage for my work, or do I just want coverage for if my work damages something, or if I damage something I'm not working on? That's general liability, and that's going to be where most people fall in for what their coverages are. But sometimes you might want professional, and different carriers will call it different things, and they can be almost interchangeable between professional liability and errors and omissions. It really depends on the carrier and the forms they use. So it's just important to ask, what is this coverage giving me? A couple of things to think about when it comes to that professional liability or errors and omissions, because it works a little bit different. They use different types of forms. One would be the claims reporting forms. So we did this was probably months ago, that we talked about the difference between claims made and an occurrence form. Most general liability forms are an occurrence form, which means they're covering from when the occurrence happened. A claims made form means the claim actually has to be reported in or within a certain period of time of the policy period. So it's important to understand what type of form you have, and errors and omissions and professional liability are almost always on a claims made form, because it limits the amount of time you have to report a claim from the policy period that the work was done in. So if I did the work last year and then I canceled the policy, I may only have 90 days, which is kind of the standard reporting period, or what they call tail coverage. I only have 90 days to report a claim for something that happened during the policy period. If I continue to renew my policy, then each renewal policy gives you a retro date. Typically should give you a retro date, which is something to make sure of. I have seen one carrier where they were not giving the retro date. So every year you were getting a new policy with no coverage for prior policy terms. So it should give you the retro date. So it's something important to make sure to check on. And the retro date would go back to the first policy period that started for that claims made policy. So that way you would have coverage all the way back for 5 years, 10 years, as long as you've had that type of policy. And then at some point, if you go, I'm not going to carry that policy anymore, maybe you're going to retire, or maybe you just say, hey, we're exiting that type of business and we're doing something different where we don't need it. Then it's important to understand, what is my options for buying an extended reporting period or an extended tail coverage? So that way I can extend my reporting period from 90 days to maybe 1 year, 2 years, 3 years down the road. So the type of policy form it's used affects how you can report claims, when you can report claims. It's something to be aware of. Another thing that comes up oftentimes on the professional liability or E&O policies is defense limits. This can happen sometimes in general liability policies also, but it's really important inside of professional policies, because usually when there's a claim, it's going to be a significant claim. But the E&O and professional liability will have the option to either have defense limits inside the policy or outside the policy. You really want to have outside the policy if you can, because the outside the policy limits means that when the lawyers are going back and forth, they're negotiating things, and maybe if you end up in court or whatnot, all of your legal expenses, the defense cost, doesn't reduce the amount of your total coverage. So if you have $1 million of E&O policies, you could easily spend $200,000 or $300,000 in defense costs if it's a complicated case. Easily. I've seen that happen oftentimes on liability claims where we're in over $100,000 to $200,000 in defense cost, because it's very expensive when you have once you get into what we're talking millions of dollars, a $1 million plus claim, they're going to hire the best lawyers they can for you. The insurance company is. They're not the cheapest lawyers. They're the best lawyers to try to protect you. As a result of that, that's going to drive up your costs too. But it's also, every time something goes back and forth, it just gets more and more expensive. So just your defense cost, hiring, you're going to have to hire like special examiners to look at stuff. They're going to have the expert witnesses. The expert witnesses cost is not going to be inside the defense or outside the defense. So you want to make sure that you have outside the defense if you can. So the expert witness, the legal fees, the lawyer's costs, all of that would be covered. And then if there's a settlement, you have that full $1 million. What can happen if your defense cost is inside limits, then after the legal fees, all the lawyers, expert witnesses, all of the defense that they built around for you, and then they go, well, we still lost. Now we have to pay a settlement. Well, if we spent $300,000 on defense cost and your liability limit was $1 million, that leaves $700,000 for settlement. So it just reduces the amount of money that you have available to settle the claim if you end up in a settlement case. So that's something to be aware of, defense cost in and defense cost out. If the defense cost is in, you might want to consider increasing your coverage amount. So instead of maybe going with $1 million, maybe you go with $2 million, so that way you don't have to worry about it. So it's definitely something you have to just be aware of and talk with your agent about that. Say, hey, what's my defense cost inside or outside of my limits? And if it's inside my limits, what's the cost if I increased to an additional $1 million in this coverage?